Good morning, whatever time it is in your time zone or when you're watching this. Today, I just wanted to touch briefly on the latest trend in the stock market, which has been going up recently over the last 6 weeks, which is tremendous. But what's driving that is really these largest companies. And that's an interesting phenomenon. We've certainly seen that in the past. So over the past month or so, the largest 5 companies have really been dominating the market and now make up over 20% of the S&P 500. So between Amazon and Apple, Google, Facebook, these companies are driving a lot of the recent returns of the market. And we've seen this in the past. And it makes sense, right? These large companies seem very safe right now. Amazon, right? Everybody's at home. So delivering packages, ordering off Amazon. Google, Facebook, driving a lot of traffic these days with people at home. And technology companies in general still chugging out products, working from home. So it really makes a lot of sense. And that's why people have been investing in these largest companies. And this has happened in the past that the largest companies have made up a lot of the S&P 500. The S&P 500, of course, is the top 500 companies. But recently, the top 5 companies now make up over 20% of the value of that index. So when these companies, gain a few percent, 4 or 5%, then that index is really getting driven up. And we've seen this in the past. So the S&P 500 has been dominated by large companies, just a handful small companies in the past. Most recently, back in 2008, 2009, right before the global financial crisis. And all the way back to .com, in 1999, Microsoft again was top dog. So right now, Microsoft makes up over 5% of the S&P 500 as the largest company. And in 1999, it was also the top company. A little bit less than it is today, in fact, making up that index. So it's even more part of that index today than it was back in 1999. Now, if we go back even further, in the 70s, there was a time period where large companies really dominated the S&P 500 index. For many years, we had the Nifty 50, so it was the top 50 companies. These were figured to be just, you could set it and forget it companies. And they worked for quite a number of years until it didn't work anymore. Same in the .com. And, just invest in, index, technology companies, and it works until it doesn't work. So we've seen this in the past, and I don't know what's going to happen from here. Of course, nobody does. Humans are really good at pattern recognition, and so you think, oh, look, when these large companies get really outsized, look what's happened next, 2000 to 2002, or 2009, 2010, what happened then? So, of course, that might happen again. But if you go further back, there's a large period of history where companies, handful of companies dominated for many years in a row, and that certainly could happen again. So it is interesting times, of course, for a variety of reasons, but also interesting in the market, what's currently driving the market. And so I thought I would just give you a comment on that, link to a couple of great articles that have come out recently around that, which I love. And so I hope you find that pretty interesting. Have a great rest of your day.